He bullies Powell into cutting rates, despite stock market at all-time high, despite inflation starting to pick back up again.
This is the battle Mallers describes as Trump versus the Fed. Trump, or any administration for that matter, will pressure Powell and the Fed to keep rates low to avoid slashing programs. But cutting rates into high inflation only pushes the system further into instability. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
The math is broken. So Luke resurfacing this chart, I mean, you cannot get enough of this chart. These are our outlays. These are our expenses as a country. So you've got HHS, Health and Human Services. You've got Social Security. You've got our Treasury expense. So we have a lot of debt. We owe interest on that debt. So what Luke writes here is this is Trump versus the Fed in one easy chart. And he's saying Powell and Wall Street supporters are in essence trying to force cuts to Health and Human Services, Social Security, Defense, and Veterans Affairs. So here's what Luke is saying. The blue arrows, which are Health and Human Services, Social Security, our defense budget, okay, Veterans Affairs. Either we make substantial cuts to those as a country, okay, substantial, like cut them all by 25% forever today. So our military defense, gone. Health and Human Services, cut. Social Security, you're not getting paid. Or the Fed has to cut rates drastically. That's the red arrow. That's the only way to make the math work. We are on an unsustainable path. Because at the top right of Luke's graphic here, he says, U.S. true interest expense is around 100% of U.S. all-time high receipts, and it's growing faster than receipts. What that means in layman speak, and the Jack Mallers show speak, is that we are spending more than we're making, and we already are incredibly indebted. So we're not going to be able to even kick the can down the road unless we bring our costs down. So it's your pick. You either cut the blues by 25 to 50%. So Trump gets out and says, your Social Security, you're not getting paid. Health and Human Services, sorry, they're gone. Our defense budget, yikes, we better not get into war. Or he bullies Powell into cutting rates, despite stock market at all-time high, despite inflation starting to pick back up again. Does that make sense? Do you understand now? Trump versus the Fed? Do you understand now the pressure these guys are putting on Powell? In a very simple graphic. U.S. Treasury bonds have negative returns over the past 5 years. Tack on inflation, and it's even worse. This has been an awful decade for fixed income. Again, guys, it could not be more simple. The math doesn't check out. You cannot own bonds. You have a choice. You and your loved ones and the people you care about. You own Bitcoin, you're going to get more housing, more vacation, more food, more education, better lifespan, better life expectancy. You own bonds? Sure, you can own bonds. Listen, I'm sitting out here in the mountains. It's peaceful, fresh air, good vibes, good mood. You can own whatever you want. I'm just letting you know, you're going to get less housing, less education, less food, less life expectancy, less everything that you want. Your life gets more expensive and unattainable when you own dollars, fiat, bonds, fixed income. I'm sorry. Don't shoot the messenger. Your life gets better. You live in an abundance because everything around you is more abundant than the money you're holding. Bitcoin is scarcer than everything else you consume. So everything else around you gets more affordable, gets better, gets more attainable. You're going to get more housing, more food, more education. You have more kids. You're going to live longer. It's a choice that you have to make yourself as a sovereign individual. Unfortunately, the government is not going to make it for you. In fact, they're going to do the opposite. If you have one takeaway from this show, what life do you want? You're going to have to increasingly decrease your lifestyle and make compromises if you own one thing, and you're going to have an abundance of everything you love if you own the other. So, this to me was notable. So this is from CNBC. South Korea's President Lee says U.S. investments demands would spark a financial crisis. So let's break this down. This is from the article. South Korea's economy could fall into crisis, rivaling its 1997 meltdown if the government accepts current U.S. demands in stalled trade talks without safeguards, President Lee Jae-myung told Reuters. Seoul and Washington verbally agreed to a trade deal in July in which the U.S. would lower President Donald Trump's tariffs on South Korea goods in exchange for $350 billion in investment from South Korea, among other measures. They have yet to put the agreement on paper because of disputes over how the investments would be handled, Lee said. Without a currency swap, if we were to withdraw $350 billion in the manner that the U.S. is demanding and to invest it all in cash in the United States, South Korea would face a situation as it had in the 1997 financial crisis, he said through a translator. In an interview in his office on Friday, Lee also spoke about a huge U.S. immigration raid that detained hundreds of Koreans, as well as Seoul's relation with rival North Korea, neighboring giant China and Russia. But trade and defense talks with the U.S., South Korea's military ally and a top economic partner, are overshadowing a trip Lee makes from Monday to New York, where he will address the United Nations General Assembly and be the first South Korean president to chair a meeting of the Secretary Council.
On the other hand, Bitcoin, which is harder, scarcer, and resistant to debasement, flips that equation. Because it is more limited than everything else you consume, everything around you becomes relatively more affordable in Bitcoin terms. The choice, he says, is stark: a life of compromise under fiat or a life of abundance with Bitcoin.
Now, what's the bigger takeaway here? If we dumb down what he just said, I love this tweet. South Korea is suggesting that their $350 billion investment in the United States. So first of all, let's take a step back. What is Trump trying to do? Trump is trying to get investment back into the United States. Because why, guys? Because globalism, this post-1971 US dollar, it hollowed out the United States. We did not produce any of our stuff. We hollowed out our manufacturing base. Everyone else around the world, primarily China, built the stuff that I as an American consume. We export our dollars. We import real stuff. That has run its course. This era is over. It's collapsing. Finito. Goodbye. Good game. And so Trump is trying to reindustrialize the United States of America. He needs money to do that. He needs capital to do that. The question is, where's the money come from? So what he's done, he's tried to weaponize tariffs. Tariffs are a sneaky way to do it, generate revenue for the United States, and then weaponize it to get investment from other countries directly in building factories and reindustrializing this country. Now, what South Korea is saying is we need a swap line to finance this. Because if you don't give us a swap line, we're going to have a financial crisis, or I'm going to cause a financial crisis on your ass. Guys, this is U.S. liabilities, U.S. assets net. So U.S. liabilities, how much foreigners own of U.S. assets? U.S. assets, how much we own of their shit? Net, the difference. The point is, how can Korea fund America without selling America? All their assets are in the U.S. Oh, you want $350 billion? Well, I'm going to have to sell treasuries and U.S. stocks. That's what he's saying. He's saying, listen, I don't have the money because all the money's already in the U.S. If you want some of my money that's already in the U.S. to go towards building factories, sure, you go sell Nvidia, sell Facebook, sell Google. So the S&P 500, the American savings account, is going to have poor performance. Oh, and I'm going to cause the treasury market to malfunction because I have to dump a bunch of U.S. debt, and we already know no one's there to buy it. So, President Trump, what do you want me to do? You want to cause a financial crisis in my country? You want me to cause a financial crisis in your country? Or are you going to give me the money? Are you going to print the money? Because here's the thing. If the U.S. is financing the $350 billion investment from South Korea via a swap line, That we've printed the dollar. It's a very fancy way of we're printing the money, giving it to them, and they're giving it back to us. Here's the whole message about reindustrializing the United States. You can only do it if you're willing to print the money, if you're willing to devalue the dollar against something like gold and Bitcoin and print the money. If you want a competitive export market. Here, riddle me this, guys. Why isn't the iPhone made in Manhattan? Why is it made in China? Because paying an employee to live to make an iPhone in Manhattan rent is like $5,000 a month. The dollar is too strong. You got weak currencies on the eastern side of the world with very cheap labor. That's why. If you want production of real stuff to come back to the US, you need a weaker dollar and you have to print the money to finance it. Oh, you want to pretend that South Korea is giving us $350 billion? But the president just said, I don't have it. The only way I can have it is if I dump your treasuries and dump your S&P 500. So either I do that or you give it to me. They have to print the money. They have to print the money. Sorry if I sound like a broken record, but it's true. They don't have a choice, guys. I'm telling you, to me, it's so obvious. This is why I believe Bitcoin is going to go up in this monetary debasement era. They have no choice but to print the money. Okay. This just shows how overweight the world is in US equities. So this is an ever more imbalanced world. A decade ago, the US would have half the world stock market. Now it's 2/3. Look at the size of this. I mean, it is just outrageous. And so for me, I mean, this is a slide that I wanted to put in just to showcase that, be careful in stocks, okay? It's not clear to me that equities are going to perform like people think they will. They'll perform in nominal terms. In dollar terms, they'll perform. They have to. The US needs stocks to go up to get the tax receipts to finance a lot of their debt and payments. So the stock market has to go up 10 to 15% a year forever, according to the current financial system we're in. That's why you've got the S&P 500 at 10 to 14% CAGR. That's what it is. But the S&P 500 gets demolished in Bitcoin terms. Bitcoin's CAGR is 50 to 60%. And so be careful, because you might find yourself buying what a lot of money is selling. Look at how much money might have to sell to finance domestic crisis or finance payments to the United States. The stock market is a global savings account. The US dollar is de facto backed by two things, the US military and the S&P 500. And the S&P 500 is really made up of these 6 companies. So the reason I put in this next slide, this is Bitcoin against the SPX. Just murdering it. Just murdering it. So again, what are the takeaways from this chapter? They have to print the money. You're going to read on the newspaper that Trump got South Korea to invest in the US. No. They printed the money via swap line to give to South Korea to invest in the US. It's printing the money. It's inflationary. It's weakening the dollar. They have to have a weaker dollar to reindustrialize, to be competitive in exports, to do what they want to do. Not even what they want to do what they need to do. They don't have a choice. And the third is be careful. Not all horses are as fast as they look. Yes, in dollar terms, the stock market will go up. But guess what? In dollar terms, everything goes up. Your coffee goes up. Your grocery bill goes up. Your gas tank price goes up. Everything goes up in dollar terms because the dollar just can't help itself. It has to go down. So that's not impressive. That doesn't win over my time, my energy, my effort, my labor. The question is, what's the fastest horse? What's the scarcest horse? What's the most divisible horse? What's the easiest horse to save and trade? That's a global horse. It's Bitcoin. It's Bitcoin. Bitcoin's going to continue to absolutely demolish stocks. So be careful, especially if countries like South Korea and Japan and the UK have to start dumping all the stocks they have.
In Bitcoin terms, the S&P is getting obliterated. Over the past decade, Bitcoin's compound growth rate dwarfed equities, making stocks look like a slow bleed in comparison. And if foreign nations like South Korea, Japan, or the UK are forced to dump US stocks to raise cash or meet investment obligations, Equities could face downward pressure even as nominal prices climb.